Good morning, guys. It's Monday, March 31st, 5:27 a.m. Central Time. Grain markets are mixed to start a new week. May corn futures up 0.75 cents at 4.54. May soybeans up 4 3/4 at 10.27 3/4. May Chicago wheat is unchanged at 5.28 1/4. May Kansas City wheat down 4 3/4 at 5.47. May spring wheat down 2 1/4 at 5.78 3/4. We've got a big USDA report today. Why don't we start there?
USDA will release its prospective plantings and quarterly grain stocks here today. Traders expect a sharp rise in U.S. corn plantings versus last year, while a sharp decline in soybean plantings is expected. U.S. corn stocks as of March 1st are expected to be down 2.4% versus the same period last year. Soybean stocks are expected to be up 3%, while wheat stocks are expected to be up 11.6%.
Let's talk about the acreage first. I'm going to read an excerpt from last year's Prospective Plantings report. This is how they do the surveys. The acreage estimates in this report are based primarily on surveys conducted during the first 2 weeks of March. The March Agricultural Survey is a probability survey that includes a sample of approximately 71,800 farm operators selected from a list of producers that ensures all operations in the U.S. have a chance to be selected. Data from operators was collected by mail, internet, or telephone to obtain information on crop acreage intentions for the 2024 crop year. I know that the acreage or the response rate to the survey is very poor, and that's part of the reason that the data isn't that great. Let's talk about reliability. How reliable are these acreage numbers versus the final planted acreage numbers? USDA will tell you in the report. This slide here, if you guys are watching, was at the toward the end of last year's Prospective Plantings report. So if you look at the corn column, the average miss, if you want to call it that, from March to final is 1.532 million acres. Their best miss over the last 20 years was just 32,000. Their worst miss was 6.6 million acres. They were off. I believe that was in 2020, and it was mainly a COVID thing, I believe. Soybeans, even worse. The average miss is 1.8 million. Their worst miss of the last 20 years, 156,000. I'm sorry, that was the best miss. The worst miss would have been 8.5 million from 2019, which was a year associated with an extraordinarily wet spring. So there are some years where they're really good. They miss it by 30,000, 40,000 acres. And there's other years where they miss it by 5, 6, 7, 8.5 million in the case of soybeans in 2019. USDA fully acknowledges here, this is a slide from their own report, that this thing, yeah, it can be reliable, but may not be reliable. When it comes to the stocks, this is a separate report that just happens to be released simultaneously. And if there's going to be a surprise here, it's usually in corn. And the reason for that is that we don't have a way to gauge feed usage in corn, which is a huge portion of the demand base. You look at soybeans, you've got two big portions of the demand base. You've got crush and exports. We get reports on those on either a weekly or monthly basis. When it comes to corn and feed usage, we don't get a report on that. Like, we get ethanol production, we get export sales, but we don't get a feed usage report. This is kind of, in a sense, your feed usage report in corn. So if there's going to be something in the grain stocks that's surprising, my guess is that it'll be in corn. The report will be out at 11 a.m. Central Time. I know a lot of you guys will be watching this after the release of the reports. Of course, tomorrow we'll talk in depth out about the results and the findings.
Chicago wheat futures declined to their lowest level in nearly 8 months on Friday. The May 25 contract fell by nearly 4 cents to close near 5.28 per bushel. Prices have been under pressure due to ongoing peace talks between Russia and Ukraine, along with ample global supplies. Additionally, weak export demand and much needed rainfall across the U.S. plains have further weighed on the market. Traders also adjusted positions on Friday ahead of today's USDA report.
Let's look at a long-term wheat chart. Are we approaching bottom of the barrel prices in this SRW wheat contract, which is, in the low fives this morning? Maybe not. Your pre-COVID bottom of the barrel was like just sub $4 on the board from would have been 2016, I believe. So it depends on what the bottom of the barrel is now to maybe give you a different look at a competing feed grain. Here's the same chart for corn, same time frame. And you might make the argument that when we posted that 360 low in August, when things were as bearish as they could get, maybe that's your new bottom of the barrel in corn, where prior to COVID, $3 even was kind of the bottom of the barrel. So I think the verdict is still out. The wheat situation globally is not super bearish or burdensome relative to past years. The ending stocks to use ratio projection is 32.4%, which would be the lowest since the 14-15 marketing year if realized. If you exclude China, and I've shown you guys this chart before, maybe it's fair, maybe it's foul, but China sits on 50% of all global wheat ending stocks. That's the projection, and that wheat's never leaving China, so it's not available for export. It's only going to be used in China. If you exclude China from this, you're the tightest since 2007, 2008, when wheat prices were much, much, much higher. So I don't know. I feel like wheat is awfully cheap here, given what I know about fundamentals. I know my opinion doesn't matter necessarily. We do have some rain coming for SRW wheat country over the next 7 days. And then if you look at the next 14 days, you're going to see some decent coverage in HRW country as well. And the timing is very good here. This is a very good map from our friends at Crop Profit. Over the next 14 days, U.S. winter wheat country is supposed to see 161% of its normal rainfall. So quite a bit of rain. Same thing for spring wheat country, 168%. I know there's a lot of people talking drought, and as it relates to the Corn Belt, we'll look at this. Over the next 14 days, the U.S. corn areas will see 147% of their normal rainfall. U.S. soybean areas will see 167% of their normal rainfall. So if you're in the drought camp, I'm not saying you're wrong, but for the next 14 days, this is kind of going in the wrong direction for you.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about Friday's premium video?
5-Minute Friday is my new my new video series that's going to be every other Friday. And in 5-Minute Friday, the goal is in a single 5 minutes, I want to pay for your $50 subscription through ROI. And I was able to do that on Friday, I believe. This is about as hardcore as it gets when it comes to grain marketing information. I discussed in 5 minutes seasonal average contracts. Do they work? We had a question come in from a subscriber who said, "Hey, Joe, my grain buyer is pitching me this seasonal averaging contract where I sell grain every day from mid-April through the end of June. Is this a good idea?" And a lot of you guys know and are familiar with the seasonals in the corn market and how they work. But there's a piece to this that I think a lot of people miss. And I explained that in this video. And if you didn't get $50 out of this video, you need to watch it again, because I think there's a lot more than $50 worth of value here. In any case, if you're a farmer, you should watch this. If you're a grain buyer and you're trying to pitch this stuff to your customers, you should watch this, because I pitched it probably better than anybody could. You should watch it, and maybe you should send it to your customers and say, "Hey, this is how this actually works," just so you know. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. Just a ton of info direct from us every single business day. You can sign up on your phone. It takes about 30 seconds. Everything is super easily accessible on your phone. It's all one click to open the emails, one click to play the videos. Piece of cake. Give that deal a shot today, guys.
China is improving agricultural land to strengthen national food and to strengthen national food security. By 2030, the nation aims to transform 200 million acres into high standard farmland. High standard farming uses science and technology to mitigate disasters, improve soil quality, and enhance crop management through information technology. By 2035, all basic farmland is expected to meet high standard criteria. In response to rising geopolitical tensions, China has prioritized food self-sufficiency by boosting domestic production and diversifying supply chains.
I'm kind of worried that this is a case where China may actually be doing what they say they want to do, which is not always the way that it works. Sometimes they say something and they do something totally different. I think when it comes to, you got to separate this by crop. When it comes to soybeans, China is going to continue to be a large soybean importer. Now, there have been some estimates indicating that maybe the import number is a little bit lower next year, but it's still going to be, 100 million metric tons plus of soybean imports. The problem, if I see one, is that corn imports and wheat imports have fallen drastically. USDA's got them pegged for only 8 million metric tons of corn imports this year and 6.5 million of wheat. And if you look at how that's trended versus the last few years, China is reducing corn and wheat imports drastically. And I believe the statistic is that China's sitting on almost 70% of all global corn ending stocks. That's the projection, and about half of all wheat ending stocks. So I guess they don't need to import this stuff. And that's potentially problematic for those markets, given that what could be a huge buyer is kind of very slowly walking away from the marketplace.
A bit more on China. The country is investing $69 billion into four major state owned banks to boost their financial stability and support economic growth. The government will purchase newly issued shares from these banks, helping them expand, strengthen their capital reserves, and invest in emerging industries. This move also aims to ease pressures from narrowing profit margins caused by interest rate cuts. The banks plan to raise up to $72 billion through additional share offerings, with the government being the main buyer. This investment aligns with Beijing's earlier commitment to issue $69 billion in special bonds to support major lenders and sustain economic stability.
My only thought here is that this sort of capital injection, which is pretty sizable, is not bearish soybeans. I'm not going to say it's bullish, but it's not bearish.
The funds continued to reduce their net long position in the corn market last week. CFTC released weekly commitment of traders data on Friday. During the week ending Tuesday, March 25th, large money managers were net sellers of 31,000 corn contracts. Since mid February, the funds have slashed their net long position by 286,000 contracts. The funds were also net sellers of 16,000 soybean contracts and 11,000 contracts of SRW wheat on the week.
The short in SRW wheat's getting a little heavy here. The long in corn is just modest now. So they've done this whole round trip where they went from record short in July of last year to not record long, but close enough back just a couple of 8 weeks ago. And now you're to a position where they're just kind of agnostic, not a big position ahead of the growing season. Maybe that's the right place to be ahead of the growing season. I don't know. I think there's plenty of upside in the corn market if you run into a weather problem, but that's a big if.
President Trump and Canadian Prime Minister Mark Carney held a productive phone call on Friday. Despite the constructive discussion, Canada still intends to impose retaliatory tariffs on the U.S. this week in response to the reciprocal tariffs set to take effect. Carney labeled Trump's tariff threats as a betrayal of the USMCA trade agreement. Looking ahead, the two leaders plan to negotiate a new economic and security framework following Canada's election on April 28th. Last week, Carney emphasized the need for Canada to diversify its trade partnerships and reduce its reliance on the U.S. If elected, he has promised to set aside roughly $3.5 billion for a trade diversification fund to improve infrastructure such as ports, railroads, inland terminals, airports, and highways.
And when is Liberation Day? Is that tomorrow?
Yeah, it's the second, I believe. So it'd be Wednesday.
Okay. So I don't know. I feel like we're going to be talking a lot about tariffs this week, and I bet there's going to be some ebb and flow and change to all of this as the date approaches. What did cattle do on Friday?
Cattle futures were lower. Live cattle were 12 cents to $1 lower. Feeders saw losses ranging from 27 cents to $1.35. Cash cattle trade was mixed, and it was incredibly light last week. Up here in Nebraska, cattle were steady to $1 lower compared to the previous week at $2.13. In Kansas, cattle were $1 lower at $2.09. Box beef was down on Friday. Choice was $2.90 lower at $3.32.82, and select was down 76 cents at $3.18.68.
Stock market's off this morning. The Dow's down 240, S&P's down 50, bonds are up. U.S. dollar's about flat. Crude oil is up 22 cents in the June WTI at 69.12. Have a great day, guys. Report at 11. We'll be back tomorrow.